What is the intrinsic value of Hershey's? Hershey's is currently trading at $184 near its 52-week low, being down 28% from a year ago and down 1.24% year to date. We are going to take a look at the latest earnings report of Hershey's, all the important financial metrics and the dividend metrics, as well as some key financial ratios. Also, we're going to use these valuation models to come up with an intrinsic value, and we will also take a look at analysts' expectations once we know the intrinsic value. And I will also give my personal opinion on the stock and let you know if I am buying this stock or not. Compared to the S&P 500, Hershey's performance hasn't been the greatest. Like I said, Hershey's is down 28% from a year ago, whilst the S&P 500 has grown by 26%. So why is it that Hershey's has been performing so bad? Well, to answer this, we're going to take a look at their latest earnings report. Hershey's is engaged in the manufacturing and sale of confectionery and pantry products all over the world. For this, you're going to need different commodities like cocoa products, sugar, corn, dairy and peanut products. Hershey's warns that increases in raw material and energy cost, along with availability of adequate supplies of raw materials, could affect future financial results. The commodities we just named are subject to price volatility to things that are listed right here. So let's take cocoa products as an example. In just a year, this rose by more than 200%, and in 5 years, by over 370%. This is all due to worldwide economic events, like the war in Ukraine. This massive increase in costs for the company makes investors nervous about the profitability of the company, despite the fact that Hershey's has been increasing its dividends like crazy over the last 2 years. We can see the dividends grew from $2.14 in 2014 all the way to $4.77 in 2023. This gives us a 10-year dividend CAGR of 7.41% and a 5-year CAGR of over 10%. For this massive growth, we also need to look at the free cash flow, because remember, dividends are paid out of free cash flow. Despite the fact that this grew by a lot in the beginning, we can see it starting to slow down. This makes the free cash flow payout ratio pretty high, at 63%. This doesn't leave Hershey's with a lot of cash left to use for other things, like buyback shares. We can see the shares outstanding in 2014 was 225 million and in 2023 it was 206 million. And this hasn't gone down by a lot over the recent years. Despite this, we can see a very nice and steady growth in both revenue and earnings per share. Would you have bought Hershey's 10 years ago, your yield on cost would be 4.55%. Before we move on to the valuation models, I would like to talk about a big competitor that's coming into the market, which not a lot of people talk about. It's mrbeast's Feastables. mrbeast, known for being the biggest YouTuber in the world, doing the craziest things you can ever imagine. Although they are a private company, the way this company is being marketed, I believe they are going to be a very heavy competitor in the market. Now that we've gone over everything, let's answer the biggest question of this video. What is the intrinsic value of Hershey's? To answer this, we're going to make use of these valuation models. Please do me a favor and hit that like and subscribe button. I'm going for 100,000 subscribers by the end of the year.
You serious?
Let's start off with the discounted cash flow model, which values a company based on the amount of free cash flow it's going to create in the future. And we're going to use this in 2 steps. By plugging in the historical free cash flow and using a growth rate of 10% and a discount rate of 9%, we can calculate the present value of the future free cash flows. By adding the cash and cash equivalents and subtracting the total debt, we come to a price per share of $190.80. Not only do I want to know about the future of the cash flows, I want to know if the dividends paid out are sustainable. We need to put the dividends per share next to the free cash flow per share and see how these two relate. We can see a nice and steady climb of dividends, and for the free cash flow, also a climb over the long term. We can see the dividends being increased by a lot more over the last 1 to 2 years, getting that free cash flow payout ratio closer to the 70% mark. We would like to see this as low as possible, as this means Hershey's can use its cash to reinvest it back into the business, growing its business more. Next up is the dividend discount model, This values a company based on its dividend payments. We plug in the historical dividend payouts, giving us an average growth rate of about 10%. Using a discount rate of 9% and a growth rate of 6%, we can calculate the stock price, giving us a price per share of $168.47. The third valuation model we will use is the multiples valuation model, which assumes that similar companies should be valued the same. Companies that are similar are General Mills, Danone and Kraft Heinz. Using the price to earnings ratio of these companies and the earnings per share forward looking of Hershey's, we come to an intrinsic value of $229.71. Next to comparing the company to others, I also like to compare the company to its own history. So let's take it a step further. I want to know how the price to earnings ratio has been doing over the past decade. Remember, the lower this ratio, the cheaper the company. We are seeing the PE ratio about to hit its lowest point in 10 years. This could indicate that it's a great buying opportunity. After calculating the intrinsic value using numerous valuation models, we come to a stock price of just shy of $200. This is higher than the current market price of $184. I also like to use a margin of safety, as suggested by Benjamin Graham, the mentor of Warren Buffett. By using a margin of 10%, the acceptable buy price is lower than the current market price. Looking at analysts' expectations, we can see Hershey's is both valued higher than the current market price and the intrinsic value we just calculated. I myself am not planning on buying Hershey's anytime soon. I don't like the outlook looking at the competitors and the price of commodities due to worldwide conflicts. And I believe there are much better options out there, especially when you have a long investing horizon like myself. So go ahead and let me know in the comments down below what your opinion is on the stock. If you're looking for a stock that is raising its dividends at a faster pace than Hershey's, then check out this video on screen I made about MasterCard diving deep into its financials and valuating the company. If you made it this far into the video, please consider subscribing to the channel and liking the video. Can we get maybe 3 likes? Thank you so much for watching and I'll see you in the next video.